Welcome back, members. I welcome you all for this fourth session for the day on the subject case study discussions on GST treatment. And to develop on this subject, we have the doyen of our profession, CA Jatin Christopher, sir. I request CA Pramodar Hegde, our Vice Chairman, to escort the speaker onto dais and then welcome him with floral bouquet. Thank you, Pramod. Members, it's my proud privilege to introduce my guru, CA Jatin sir. Jatin Christopher is a chartered accountant, cost accountant, and a law graduate. He qualified in the year 1996 and specializes in indirect tax laws. He is a published author and a resource person for the Institute of Chartered Accountants of India in its various post-qualification programs on indirect taxation and extends support to ICAI in publication of educational and research material on various indirect tax topics. He is also a resource person for the government in conducting training for practitioners, trade, and officers. He has been in practice since 2000 as a partner in JCSS, a full-service firm with presence across India. Members, as you all know, tomorrow is Cricket World Cup finals, and here is a speaker who is on both sides, both batting side and fielding side, meaning he teaches us also and he teaches the department officials also. So you know when you get the notices whom to contact. With this brief introduction, I present before you CA Jatin Christopher, sir. Over to you, sir.
Good afternoon, friends. It's a responsibility and a privilege to come and address members, that too on a topic of such growing importance. With each passing year, the implications are profound. I acknowledge the presence of various senior members here, so I take this with great circumspection to present relevant and usable views than discuss possibilities, because we are very close to the filing due dates. I also acknowledge the presence of all professionals who are, Vishnumurthy sir, all the speakers, people who address conferences are sitting in the audience. I have to acknowledge their presence. When we speak about annual returns, we'll also have to start by acknowledging that we are filing annual returns for March 22, March 23. Therefore, the development in allied laws over the last 6 years will also have a bearing on what position we take. I'm sure you have seen in the presentations earlier about how the reporting needs to be done for transactions in part 2 and part 5 of GSTR9. But also please consider that transactions of earlier years that have been reported in the current year, whether it is through 3B or through DRC3, need to be excluded. Therefore, GSTR9, if someone takes a look at, it will almost not make any sense to the reader, because the 3B data includes earlier year data, so GSTR9 would have excluded something flowing from 3B. And then current year data reported in subsequent year appearing in part 5 will also have to be taken into consideration. So that data will not be in the relevant year's 3B. So let's pause here and step back and look at what's the evidentiary value of anything said in GSTR9. Are books of account a relevant source and a reliable source of evidence against the assessee? Can what is contained in the books of accounts be relied upon by revenue to raise a demand, whether for credit or tax or refund? Can they rely upon it and make a demand? For example, books and 3B are not matching. Turnover in the books is more than turnover in 3B. So the department raises a demand. Is this a case that cannot be defended? we had another occasion to discuss this a year ago about what is the relevance as a source of evidence of books of accounts. Books of account are not a reliable source of evidence. Section 34 of Indian Evidence Act, 1872, 145 years before GST, it has been decided that books of accounts are not a reliable source of evidence for any transaction unless it is corroborated. And it is rightly so, for the reason chart of accounts does not follow HSN system. You call something transportation charges in the books of account does not mean it is based on the HSN code corresponding to GTA services. Security services as a head of account does not follow the HSN code for GST purpose. So therefore, please don't be anxious that books of account somehow are a compelling evidence against the taxpayer as far as tax positions taken in GST returns. The next aspect to look at is what is accounting income need not be turnover for GST purposes. Discount received from supplier should be reduced from the carried value of inventory of the current year. Discount received for previous year purchases in the current year cannot be reduced from the carried value of inventory of the subsequent year. It has to be reported as other income. So therefore, something appears as income in the financials does not ipso facto mean that it is arising from supply. Next, can a willing taxpayer pay tax even though tax is not leviable? A willing taxpayer, can he go and discharge that liability under a misinformation? The source of this misinformation could be his own misunderstanding or an inducement from an officer saying that you have to pay tax. Unless the taxing ingredients are brought to bear, no demand can be established. So even if the taxpayer wants to pay tax, he should not pay tax. So when you look at financial statements, please be extremely vigilant as to not everything in the financial statements need to appear in the GSTR9. We have to identify how it needs to get reported if there are some transactions that may have been omitted. And you see, I'm sure you have discussed examples like purchase returns can be effected through a sales invoice in GST. And many instances reversal, the credit claimed itself is after Rule 42 reversal, so therefore there need not be credit at the gross value and then a separate reversal. Although department says, how come your reversals under Rule 42 is 0? That means you have not complied with Rule 42. Burden of proof of reversal is on department. If the credit claimed itself is after reversals, there is no requirement to show any reversals all over again. So when you look at how these transactions are going through, please be very careful. There is no hierarchy as far as notices are concerned. ASMT 10 under 61 is a simple notice, anybody can give a reply. Show cause notice only, you should go to Sai Prasad. It is not something like that. ASMT 10 are the seeds being sown for a show cause notice in the future. How do you respond to the ASMT 10 can have a bearing as far as how can you respond to the show cause notice eventually. Reply to a notice is not a justification of self-assessment. Reply to a notice is not a justification of self-assessment. GSTR 9 is the place for us to examine, not just to dress up the numbers and present it in some fashion. The GSTR 9 is not a place to dress up some numbers and present it in some fashion. It is to keep in mind what possibility exists as far as canvassing an alternate interpretation. We should have a visibility of that and present that information in the most exculpatory manner. That is a manner that exonerates any wrongdoing on our part. There's an instance, just this morning I saw this message from an officer. That is the reference possibly Manjunath made. Restaurant services, he has charged 18% tax and claimed ITC. restaurant services. He saw so much of ITC going waste, so he decided he is going to do something. So he said, I will pay 18% tax. Take it. Take 18% tax, but give me that 18%, that ITC. So the objection raised was, you should have paid 5%, you have collected 18, so therefore you will forfeit the 13, but the condition to that 5% notification you have to satisfy, so please now pay back that ITC which you have utilized. Assessee gives a reply. The reply is so beautiful. It says, since you have anyway paid higher tax, what is the loss to the government? So kindly drop this observation in your audit. See, many times one would tend to think logically, and that is very dangerous because we are thinking extra legislative explanation. When you look at GSTR9, I would only simply suggest that please look at the attendant information that we have as far as financial statements are concerned. So the place to start would be the books and the audit that has already been concluded and filed. Can you identify things in the financial statements that should not appear in GSTR9? What is in the financials that should not appear in GSTR9? Obviously, we will need some sort of a control sheet to identify items and place it in different buckets so that we don't lose track of this, because department will come in 2030 and ask questions. Because due dates keep getting extended. What are the information that needs to appear in GSTR9 that does not appear in books? Someone called one day suddenly, but 2018-19, around that time, he said, sir, I had one small question about the joint development agreement. Accounting treatment of joint development agreement. So he said, what is the accounting treatment that you want to follow? No, if you can just give me all the journal entries. My client is the landowner. He's got 40% share in the project. Can you just give me journal entries? Urgently, I want to file tax audit report. So I told him, you're not supposed to pass journal entries because of, he was very surprised. So I asked him, what do you think is the reason? He said, section, he said, no, money measurement concept. First PUC. That is how relevant it is. Transactions in GST returns that cannot be in the books, transactions in books that cannot be in GST returns. Next, outward supply sitting in expenditure account. Sai Prasad must have discussed that. Outward supply sitting in expenditure account, outward supply sitting in balance sheet. Money is received on behalf of client, left in the balance sheet. So therefore, there are things that only we can understand, nobody else can understand this. Only we can understand the marvelous world of accountancy. So therefore, we should only identify where each of this should go and have another list to say what should not appear in GSTR9. This year's GSTR9, what should not appear, because it has already appeared in last year's GSTR9. So therefore, please be very vigilant as far as looking at how these allied transactions have to be treated as far as GSTR9 is concerned. Now let's say, how many have filed monthly returns? I'm sure everybody has filed monthly returns. How many have filed all returns without a single error? Okay, any 1 year's return without a single error that year? No. Single month return without an error? Very good. Single annual return without an error? GSTR9 is supposed to be to correct all the things and report correctly. So GSTR9 at least, is it correct? This year GSTR9, will it be correct? Next year if we have seminar? So therefore, calm down. We are going to file something that is wrong. In all sincerity, we will file it. Self-assessment has to be done truthfully. It does not say accurately. So that's the beauty of GSTR9. So all earlier speakers have motivated you how to do it accurately. I am here to motivate you how to do it sincerely. After that, the rest. See, look at it from this point of view. GSTR9 becomes relevant because it solves many problems. Department issued show cause notice saying your GSTR1 is not matching 3B. Reply. we have already filed GSTR9. After marriage, you don't have to complain that the engagement catering was not nice. Correct, no? What can you do now? A suit was not nice in the engagement. Marriage. You spend another 40 years, you will learn how to find happiness. So therefore, GSTR9 is a tremendous source of defense tomorrow. 9 has been filed, 1 and 3B I will not give answer. But 9 and 1 and 3B are also matching. That is where the problem is. Thankfully, nothing is matching. All right, so therefore, please be, I have seen a number of 9 and 9C filed with blatant errors. For example, 8C, 13 and 12C, not matching. You know the table numbers I am assuming. 8C, 13 in 9, not aligning with 12C of 9C. 12C of 9C of the previous year should become 12B of 9C of the next year. See, these are all simple things we understand, but when you see a GSTR 9 and 9C filed by somebody else, you will be able to locate all these things. When we are filing it, somehow these things are very evasive. The number, everything looks like they're matching. Reasons for differences that we report, very, very dangerous. I have committed murder and the dead body is under the tree. That sort of reasons. Skill in describing the reasons. Skill in describing the reasons are very important. So I'm sure all that skill is available in this room. So therefore, you please be very non-committal as far. I'll give an example. There is an expenditure of royalty appearing in the P&L account. Contractor, he has issued bills, contractor's bills, some government contract, 100 crores project. He has, some deductions have been made, some, let's say 10 crores of royalty has been deducted from his various bills, and the auditor has neatly taken the RA bill, extracted the deductions, kept some in the balance sheet, some in the P&L. Very nice job has been done. On the face of the P&L account, royalty 10 crores is appearing as an expenditure. Now the question is, on that royalty, has RCM been discharged? Now if you say, royalty itself is a tax, how can there be any GST on royalty? Embedded in this reply is an admission that RCM has not been paid. Embedded in this reply lies admission that RCM has not been paid. Option 2 to give a reply. Demand for tax on RCM has been stayed by Rajasthan High Court following the decision in service tax by Supreme Court. Embedded in this reply is an admission that I have not paid any RCM. So therefore, please be very cautious how responses have to be provided tomorrow, and to provide those responses, what should or should not be stated in 9 and 9C as far as the returns are concerned. Without certification now, auditors are at complete liberty to make sure that the reporting is done with all the information that you feel may be necessary going forward. So when you look at it from this point of view, please be extremely careful. Enough about these forms, we look at other things. Last few years, the income tax assessment and appeal papers, is it necessary for us to see what should be done in GST? Because in scrutiny or assessment or appeals, etc., in income tax, positions taken in the then financials may have got altered and admitted and conceded by the assessee to avoid further litigation. Conceding to new tax positions, whether those have been carried in the financials of the current year or those positions have continued in the books, but each year's assessment is treated on its own merit. For example, some disallowance in income tax, during scrutiny it has been accepted, tax discharge, but that deduction continues to be claimed even now. These kinds of things are tremendously important because it can alter how we are treating those transactions. So all adjustments as far as income tax is concerned. Transfer pricing, if you identify, there too you have instances as far as those adjustments, changes in the markup percentages, all of those. See, GST does not operate in isolation. GST necessarily has connections with various allied laws because all the legislations are basically talking about the same underlying transaction. Treatment of law is only different in each legislation, but the underlying transaction remains the same. So therefore, one cannot overlook the treatment or the change in the treatment given in earlier years in allied laws versus GST. Take a small example, how profound it can be, simply is so alarming. A box of sweets, is it goods or services? A box of sweets, is it goods or services? It's not a question that is one can readily answer. A box of sweets, it all depends on what kind of sweets, how is it made, what is its shelf life, what assertions have been made by this taxpayer under allied laws. Pure ghee sweets, what does it mean? It means no preservatives added. You have to eat it today after dinner even if you are full, because tomorrow it will get spoiled. Alright, you just settle down after dinner, finish that box of Mysore Pak, otherwise tomorrow it will turn rancid. Identify these aspects, because today in GST, no matter how much tax has been discharged, no matter what tax positions have been taken by SSC, no matter what circulars have been issued, if there is a possibility that an alternate view can be canvassed, it will be canvassed. It doesn't matter what tax position you have taken. If it is possible to take an alternate view, that view will be taken. That view will be taken to see what new revenues can be extracted from a given transaction. What is the difference between bakery and restaurant? Don't respond, think about it. You know what a bakery, what do they sell, what do they make, how do they make, how do people consume it, and a restaurant. In your mind, if you really think about it, of course the two are totally different. Name itself says, but if you actually step back and think, and if you treat all items of food and drink for human consumption are only supplied in both these places, all right, and both those instances reach a vanishing point, basically to say that bakery is a restaurant with takeaway facility. Circular number 27 says bakery is a restaurant under 10(1)(b) of GST law. So therefore, what appears to our mind very commonsensical answers, very obvious answers, may not necessarily be true as far as how it should be treated in GST. So I would sense table number 9 of GSTR 9C, when it is being filled regarding the rate breakup, great care and attention needs to be paid, because we have to provide the breakup of the turnover, whether we have paid tax to any extent on RCM basis, forward charge basis. 5, 8, 10, 12, all the percentages that is applicable, what is the breakup that we have provided will expose, because I have seen audit discussions, not the 65 audit is conducted, but after concluding field audit, there's a discussion that takes place to examine what issues can now be raised. Possibility of an alternate view must be raised. All right, we'll take few examples relevant, close to our hearts, like accounting standards, guidance notes, etc., how it can throw more light as far as tax positions are concerned. Assessee states that they are in the business of research and development. Now, you know, to avoid intermediary exposure, IT companies have classified themselves as R&D companies and continue to be STP registered and export their services to overseas companies. Research and development company has incurred a lot of expenditure which is revenue in nature, and has claimed ITC on all of those. How come they have not capitalized their revenue expenditure? AS 26 prohibits them from capitalizing expenditure unless enduring future benefits can be established. Auditor is satisfied that there is no enduring benefit, so he has not permitted anything to be capitalized. This is a very unequivocal admission that there is no future benefit that came out of this expenditure. 16(1) says credit will be allowed on input services used by him in his business. Presently, it may be intended to be used. Credit will be allowed immediately with the intention that it will be used. But what if it is eventually not used? If there is an inward supply, in anticipation that I will use it for future revenue, I have incurred that expenditure, I have taken credit. Tomorrow, if it is not resulting in any revenue, what happens to this? Statutory company assessee himself has treated this as a period cost and expended this without capitalizing it. So therefore, we have to be very careful. How do you describe the nature of business in notes to accounts? Normally, you try to say, like introduction of the speaker, Manjunath was reading that he has many years of experience, but all of us have same years of experience in GST. Nobody has 25 years of experience in GST, isn't it? Only I get a chance to pretend to be an expert in front of you, but I know you'll filter most of the things that I say and not use almost all of it. At least you will give it your consideration. That is my pleasure, that you will give it some consideration while you evaluate which ones of those you will want to adopt as far as your own evaluation of each client's facts are concerned while preparing 9 and 9C. So please be very careful when you evaluate what is the effect of accounting standards on facts. Another example. Interior decoration is done by almost all clients every year, and they have capitalized it. What is the classification in fixed asset register or the schedule of fixed assets for interior decoration? Everything that is given to the contractor, should it be classified as interior decoration, leasehold improvements and capitalized? Or within the leasehold improvements resides audio video equipment, which is not necessarily part of leasehold improvements? Movable furniture that is bolted to the floor only because they are suspicious of the visitors. That's the reason why it is bolted, not that it is, without that the building cannot be enjoyed. So various motivations can be there to identify how to. Lackadaisical approach to classification and heads of account selection in books of accounts is my biggest grievance. Auditors need to be appraised that please don't write notes to accounts without considering GST implication. I saw one balance sheet, big company, parent company listed outside India. The notes to account says we are not following the guidance note of ICA of September 2020 on share-based payments. It says I don't follow the guidance note. Disclosure of a position that has been taken, now that attracts, what is the implication of this treatment? Now you know that whenever overseas entities issue share-based payments to employees of the Indian company, there is a remittance required from the Indian company to the parent company and a charge to the P&L from the foreign company. If you see Annexure 7 of our guidance note, very clearly it says a financial assistance is provided to the subsidiary which is expended in the form of remuneration to its employees. The privity of contract between the employee is not with the parent company, it is with the subsidiary company. So then what is the parent company doing? Giving benefits to its employees. This, if we consider very clearly, what tax position need to be taken. I'm not even advocating whether the issue is finally resolved that tax is to be paid. Whether the assessee for March 23 has paid GST or not, that is established. He has not paid GST. What should you state to this extent as far as the balance sheet is concerned? And if what is stated in the balance sheet is already signed, done and dusted, what explanatory notes can be provided at the time of 9 and 9C so as to illuminate the reader's understanding as to what is really meant by saying that we are not following guidance note? Very, very profound. Capitalization of construct, 17.5 C&D, safari retreat, I'm sure there are many people, 50% of the people have utilized the benefit of safari retreat judgment. Some have retained that credit, some have utilized it also. How do you identify what expense need to be capitalized? See, during our article days, I remember Y.H. Malagam, he was an authority as far as accounts, auditing, valuations are concerned. He had made a comment in one of the Tata Group, Tata T balance sheets. In their estate around the estate in Assam, they incurred at that time, 92, 93, those days, they incurred 100 crores in constructing a boundary. It was constructed out of stone and mud. Clearly it is classified as temporary structure because mud is used to construct the boundary. That was a revenue expenditure. The subsequent year, they incurred 200 crores in carrying out repairs to the boundary wall, replacing mud with cement. Neither did it increase the length of the boundary wall nor the height of the boundary wall. So therefore it is repair and maintenance. Routinely construction costs are capitalized as such also because credits are necessarily available when you incur construction costs. If you take real estate as an example, on a certain date, occupancy certificate is received. We need project-wise data to make these decisions. On a certain date, occupancy certificate is received. From that date onwards, no output tax is payable on units that are sold. Developer's share of units, anyway on reverse charge, tax would have been paid, and prior to 1419, those projects are ongoing projects, a different treatment. But today, those treatments are not relevant. It is relevant only as far as commercial units are concerned. After OC, how much ITC has flowed into 2A can raise question marks about the bona fides of that occupancy certificate. I'm telling you in all sincerity, in Hyderabad, in the VAT regime, you know, construction first, if you take an individual house, construction, first there is foundation, there is excavation, then stone foundation is used. Before actually brick construction commences, there is a layer of concrete that interfaces the stone foundation with the brick construction, that's called plinth. Once the plinth is visible, you know that the house cannot turn out any other way. It has to only go based on the plinth. After plinth, you could apply for OC. After plinth, you could apply for OC, so construction of house is basically complete. Remaining was all finishing works. Finishing works was substantial cost compared to the costs incurred. So therefore, please don't assume occupancy certificate is unquestionable. There's information within the books of the assessee that can raise questions about the validity of occupancy certificate. Let's take an example. OC is received, subsequently some gym equipment has been received, some repair, some boundary wall, some beautification things have been done. It is still all right. 100 crores of cement and steel are purchased. 100 crores of cement and steel are purchased. After OC has been received, questions will arise saying, what are you purchasing so much of cement and steel when you on the other hand are saying that OC has been obtained? I know that OC will not be obtained unless it is habitable, but habitable does not necessarily mean all the aesthetics. Today in construction cost, aesthetics also forms a very big part of it. But while considering 9 and 9C, can we ignore? Can we say that there is nothing that needs to be done as far as looking at 2A for this project post OC? What's the velocity of incoming supplies? I know taxpayers would have paid attention to tell all their contractors to send in their bills in the quarter when OC is being applied, but that may not itself be sufficient because there are many instances that OC starts the 5-year warranty period. So therefore, there could be various business reasons why something like this has been done. So my question is, when we are doing 9 and 9C, are we simply depending on our expertise in accounts, finance, GST, or are we in a position to bring our understanding of that domain? Are we in a position to bring our understanding about that domain into the assignment so that it will change the perspective as to how do we look at this transaction? I'll give an example why this is so relevant. Let's say an authorized service center has reported a sale of scrap of 2 crores. Authorized service center has reported sale of scrap. On scrap they have paid GST, let's say 5%. Now the question that would come to the mind of someone who understands this domain well will be, if there is sale of goods, where is the purchase of goods? Authorized service center will have purchase of parts, sale of parts. Which is the scrap? Any of the scrap purchased from the OEM has become scrap and which is disposed of? Unlikely. There will only be a purchase return. There will never be a scrap. So therefore, these are scrap that is generated during the servicing activity. If there is a sale of scrap, then there has to be a purchase of scrap. Without purchase, sale is not a sale. Without purchase, sale is not a sale. Nemo dat quod non habet. He who does not have cannot give. If you don't have title, you cannot give title. If you cannot give title, then it is not sale of goods. If it is not sale of goods, it is supply of service. Service attracts tax at 18%. We have paid tax at 5%. Will there be a risk that there can be a demand of 13% tax? No, there's a risk that there can be a demand of another 18% because 5% you collected, you have to forfeit. 18% which you are liable to pay, you have to pay afresh because there is no offset. So I have had our differences about this interpretation, but the question is that this is something that we have, it's only an example to share with you, perhaps even challenge some of the youngsters is, do you know the industry which you are doing the audit of a particular firm while filing 9 and 9C, or you attended seminar and got fully charged up and now you're going and signing off on all those workings to say that this is good to be filed. In fact, in many instances when we are defending notices, the first line of reply is that this 9 is not reliable. Books are not reliable. Don't rely on anything I have given you. You tell me what is the demand all about, we'll see. Reason is there are so many holes in the material that they already have and they're working with based on that. This one thing comes true that the tax department somehow assumes that whatever is in the books, whatever the 9 and 9C are unquestionable. We have to touch upon discounts and incentives because that's occupied all our time, the greatest in the last 6 years of deliberations in GST. Forget what tax position has been taken. Forget what tax position has been taken by the client. We need to have a view of our own. Even if it is wrong, at least it's our view. Have your own wrong view, then someone else's right view. OEM has sold material to the distributor or dealer will sell it to the consumer. The dealer claims that he has got an incentive to sell his inventory. Pause and think what's going on. My inventory is not OEM's inventory. Correct? My inventory cannot also be OEM's inventory. To sell my inventory, I should have interest. Why should someone incentivize me to dispose of my inventory? Whether if I'm not able to dispose of my inventory, what is it to the OEM? He will have one less dealer next year. But it is my reason, I have the entire interest is mine to be able to sell it fast. If I'm getting an incentive from the manufacturer to dispose of my inventory, we have to examine, is the incentive linked to a contingency or is the incentive linked to an obligation? I'll explain. If the incentive is linked to a contingency, it could get covered by 15(3)(b). Credit note can be issued with or without GST, that doesn't matter. That part GST department still does not agree. With or if there's a contingency, what is a contingency? It should be known beforehand. The occurrence is tied to a chance in the future. Whether it will come to pass or not will be known only in the future. It could not have been known but its existence was known beforehand. Examine this. In most cases, the documentation is very poor. May not be in automobile, but it was definitely there in electronic goods, white goods, cement. Most of these instances, you will find that there is ambiguity whether there was a contingency. But if there is an obligation, see the scheme of I have to do this, then I will get incentive. Obligation is a service. Obligation that I fulfill is a service that I am performing to earn this. Let's not call it discounts. It is the nomenclature is discount. The nomenclature is discount, but nomenclature in accountancy we have agreed already is not based on HSN system of classification. So therefore it is for us to identify whether it is tied to a contingency or a obligation. Now the reason why we have to look at this is because we will have to contrast this with discounts. What is discount? Chartered accountants giving discounts to client. What is it? We can understand this way. We can agree on this most readily. Chartered accountant giving discount to client. What is it? Bad debts. Correct, no? Bad, can't collect, so discount. You can issue a credit note because the rules of accounting says there's no other way you can get rid of this. When a discount is given, first we have to eliminate discounts which are due to irrecoverability. But then there are very interesting discounts. Discounts that are unilateral, discounts that are bilateral. both parties come together, sit and renegotiate the price originally agreed. I'll give you 2-3 examples why it is relevant. Stilk versus Myrtle. What happened in this case is, certain sailors entered into a contract with the captain of a ship to take the vessel from one place to another. Midway in the sea, the sailors, there are more facts but not relevant. I'll explain the facts in a very truncated manner. The sailors demanded additional consideration to reach the vessel to shore. Captain agreed. Vessel was brought to shore. He paid the original price. He did not pay additional consideration. Sailor sued the captain. Captain approached the court and said, for the sailors demanded additional consideration to do what was originally their obligation. Therefore, for paying this additional consideration, I have not received any consideration. Consideration is a two-way street. Court said, correct. Stilk versus Myrtle is a authority on the subject, saying for even additional consideration can be negotiated due to supervening inconveniences after contracting. But they said you can't pay this, you don't have to pay this additional consideration if you don't have consideration for that additional consideration also. So therefore they said it was not payable. Where is it relevant in GST context? Bring it here, let's examine what's going on. Now when you see jewelry, petroleum products which are liable to GST, liquid fuels, all liquid cargo, all pneumatics, if you identify, you will find this very relevant. Gold loan scheme. I will give you, let us say, 200 grams of gold. 1 year later, you will give me back 200 grams of gold. You will give me gold. 1 year, 200 grams of gold I will give you. 1 year later, you will give me back 200 grams of gold plus some interest. For GST purpose, it's called gold loan scheme. For GST purposes, what is this transaction? The test is whether the same gold that was given is given back. If you go to a bank, they will not give you somebody else's jewelry. Your jewelry only, you will get it back. But in a gold loan scheme, you have given 200 grams. What will they obviously do with it? They will use it as inventory and they will do their business with it. When the time comes to return the gold, they will find another 200 gram gold, return it back. So is this a sale where the receivable is not payable immediately? So this is a transfer of property. Transfer of property, I have not collected sale proceeds. I may not even bother about what is the quantum of sale proceeds, but it is measurable. Market rate of gold, everybody knows. 1 year later, I will get additional money. When I get additional money, that is the interest, what is called interest. This is purchase of gold. This is a sale of gold, this is a purchase of gold. I am unregistered, so when I sell, I don't pay tax. No 9(4) applicable to the jeweler. At the end of the tenure, he will sell the gold to me. Does he have to pay GST on the interest? Merely because you call it interest does not mean it is not additional consideration. Entire money that he has to settle has to be treated as a sale consideration because it is settling his obligation. So when you examine transactions, we have to overcome the trade parlance to find out the legal implication of the expressions they are using. I'll give you a couple of more examples to highlight this point. You go to this aviation turbine fuel, the fuel farm in Bangalore airport. There are Indian Oil Sky Tanking has set up various storage tanks to store aviation turbine fuel. Different oil companies have supplied aviation turbine fuel. Do you think there are compartments inside? Do you think there are compartments inside HP ATF, BP ATF, Indian Oil ATF? It's all mixed up. It's all mixed up. And at the tarmac, each airline can draw. Now, whose stock has been sold to which airline? How do you know? Whose stock, which airline has been sold? This is called stock in common. What is stock in common? Stock that the sellers don't care about their identity. Whether it is HP ATF or BP ATF, Indigo does not care. HP and BP also do not care. If I have delivered so much of fuel, every month you account for what is the purchase because each oil company has contracts with airline. So just because stock gets mixed up does not mean identity has lost, because they are so homogeneous that there is no need to maintain separate identity. But in the case of gold, you have to identify this. Give another example. There is a person who makes jewelry, job worker who makes jewelry. Gold is given by the registered person to the maker. Gold is given by the registered person to the maker. When he gives this gold, the job worker will manufacture some gold articles. He will not charge any making charges. 2% wastage. 2% is a wastage, no making charges. Or there might be some making charges. Let's take in our example, no making charges. What is the value of job working? Now, if you identify really, you will know that in the job workers' books, there will be sale of jewelry without purchase of jewelry. Now, why this purchase business is important is authorized service center, rice mill, dal mill, job worker for jewelry, contract manufacturers, not just small transaction, contract manufacturers. If I have made a purchase, what is it, what document is required? 31(3)(f) invoice. Even if 9(4) is not applicable, can I record a purchase? Let us take an example. An authorized service center records purchase of scrap. What value? Some reasonable value you can arrive at. Once you start debating valuation, you have considered supply. Some valuation you enter into. If you record purchase, will anyone object to that purchase? If I record purchase, I can protect 5% sale. If I record purchase, I can protect 5% output tax. Friends, these are transactions that can be recorded for the very first time in 99C itself. So therefore, it is tremendously important to identify how these transactions operate. Very quickly, we will go into one or two instances. Circular 199, we have to definitely talk about, which said inter-branch activity deemed to be 0 rupee, deemed to be 1 rupee. It's deemed to include whatever is deemed to be included also. So many deemed to, everything is deemed to be okay. What this circular has done is that it has first exposed the festering wound. It has exposed the fact that inter-branch activity is liable to tax. It has basically blessed Columbia Asia advanced ruling and AAAR also. It has said it is true. It has to apply. See, they have only given relief saying that value is 0. They have not said it is not even true. They have said it is true. All right? There's a rider there. There's a rider which says, if it is fully creditable at the recipient's end, then there is no exposure to the head office. Now we will take one example. If the outward supply is 0 rupees, will Rule 42 apply to head office? There is a very clear admission that inward supplies on which head office has claimed and accumulated credit belongs to somebody else. It has been consumed where the value is 0. This is still debatable, but you have to take a position saying that if outward supply is by a fiction of law valued at rupees 0, there is no doubt that the outward supply is existing and whether Rule 42 treatment has been given or not. No, but circular once department issues, officers are bound by it. Ratan melting, Sai only was sharing this. Ratan melting and wires, circular 1006 very clearly said under the earlier law that if the circular is contrary to the judicial authorities, officers are under a duty to disobey the circular so that that issue will be carried before the court for its reconsideration. So please visualize what is being examined is not different from what is in the circular. What is being examined is as a byproduct of what is said in the circular, should head office reverse under Rule 42 any amount of credit? You can say no, it does not have to reverse. You can say yes, it has to reverse. You can say I will reverse 10 lakh rupees and be done with this. Or you can say that no, I will have to work out what ought to have been its value and then arrive at the pro rata reversal. You have work to do. You have work to do arising from this circular. This takes us to the next aspect. If the branch is partly eligible for credit, partly not eligible for credit, what becomes the implications? I will not go into to describe instances, but I think you can extrapolate and identify what those implications might be. The next aspect that can arise because of this will be P outside India. There is a permanent establishment outside India. So one of those instances where we are going into this issue for the maybe 3 years ago was to ask the assessee to produce his worldwide returns. To ask the assessee to produce his worldwide returns for our examination. You are GST auditor in Karnataka and you want California return. Huh? That's why your fees is high. But if you demand this information of worldwide returns, you will identify lot of facts. I'll give you 3-4 instances for you to please evaluate and examine. One hypothetical example, then I will extend it to this context. A company in Bombay has got a contract to export plant and machinery to Africa. The 90% of the plant is manufactured in their factory in Faridabad, UP. UP they have a GST number, Maharashtra they have a GST number. Which distinct person is the exporter? Which distinct person is the exporter? The foreign customer does not care. Which distinct person is the exporter? Whatever is asserted to customs, whatever is assured to customer, correct no? Whatever is told to customs, that is a reliable source of evidence. Whatever is told to the customer, say, Faridabad, you forget, if Faridabad does not manufacture, I will go to Haldia and get it manufactured there. But I am the one who has the legal authority to undertake this obligation, the capability to deliver on this obligation, and the capacity to fulfill any warranty obligation. Uttar Pradesh distinct person has nothing. He would not even have secured this contract, because to even secure this contract, BG, balance sheet strength, many of these aspects may have been required. So therefore, obviously the distinct person in Maharashtra is the one who is doing the export, and therefore Uttar Pradesh has to charge IGST, Maharashtra should claim ITC, and then perhaps be eligible for zero rated benefit. But what if this is not done? What if under misinformation both have been treated as zero rated supplies? Is it possible to bifurcate? Is fractional transfer of property possible? Only one decision of sister in GSFC's case where there was a discussion about it, but chartered accountants understand this best because you know our financials. Is it possible to have fractional transfer of property? Unless it is, see, fractional enjoyment is possible, but transfer of property, is it possible in goods to transfer them? It's not possible. So therefore, secondly, without the customer's consent, can I subcontract it to somebody? Unless it is the same legal entity where a customer is agnostic, so we have to examine legally what is my position, in GST what is my position. Why we have to examine this example is because it will illuminate our minds greatly when we go cross-border. California branch has 50 engineers working on a project secured by the IT company in Bombay. Secured a contract from a US airline. And in California, 50 engineers are working. From which distinct person fulfilled this contract? India. So is this import of services from California branch? California branch is a PE, so as by attribution principle, they have taken this contract revenue, severed some portion of it, compliant with Indian transfer pricing and US transfer pricing, and offered some portion of that revenue to tax. The expenditure incurred in that country is not sought to be taxed in India. Extraterritoriality will attract, so therefore that's not what is being done. But if for income tax you have considered that 25% of the contract is attributable to the PE outside India, can we say 100% of the export belongs to the distinct person in India? Examine the contract. Contract says 100%. Is it possible for 25% of the sale proceeds to be collected, retained and spent in US? FEMA does not allow it. All repatriation should happen in India. India should fund the branch for its expenditure. If you start tracing the expenditure, 15 CSCB only says No TDS because it is expenditure for foreign branch office. That is not the focus of attention. Expenditure incurred in foreign currency to sustain costs in a foreign branch is an indicator that there is subcontracting. Revenue is 25, expenditure is 20. 5 is offered as taxable income in US. It's the 25 that will attract reverse charge. Under 74, if they raise a demand, it will not even be eligible for credit. Can they demand this, raise this demand under 74? Two possibilities are there. Under Circular 1053, whenever an innovative interpretation is being canvassed, extended period of limitation should not be invoked. But here, can you say there is evasion of tax? Can you say there is evasion of tax? What does evasion, revenue neutrality? Revenue neutrality does not exist in GST. Please don't, if you quote revenue neutrality is finished because GST is a multi-point tax with credit. If ultimately revenue neutrality works, then all subcontractors should be exempt because main contractor is paying tax. Having said that, when you look at branches existing outside India, is it possible for us to ignore the treatment in India? Who has signed the contract? Listed companies in India will not allow branches to sign contracts. They will want to accumulate global revenues in the listed entity in India. Unlisted companies might authorize subsidiaries to sign contracts, collect money, expend on their own. When you look at transactions, the things that we will need to search, how many of India company employees are located outside India? Are they liable for 192 TDS in India again? If they have spent substantial time in the year outside India, perhaps the Indian branch in a foreign jurisdiction has employed foreign nationals because Indians could not get visa to travel in in those numbers. Friends, you will have to go into so many things, and Northern Operating Systems is a decision that is a case in point where various records were relied upon to justify an acrimonious conclusion that the court reached. Maybe it will get overturned someday, but the question is, how can we as auditors doing 99C ignore all this material that is lying around us and say that I will just do 99C? Two more examples. License office of a foreign company in India. Do they require GST registration? License office is anyway not permitted to undertake business activity. So therefore, since they are not doing business, no need for GST registration. It has 100 employees. License office, it has 100 employees. Then what happens? As long as it remains a license office, the question to be asked is, has the license office status been challenged by income tax? 100 employees, you are filing TDS returns on 192. How come they have not examined what are these people doing? Okay, income tax has not raised question. You are not going to alert anybody. But if you examine a little bit further, the breakup of the emoluments paid to people and the designation of these people, the country in charge is called South Asia Territory Manager, akin to a marketing office. He gets 2% commission of what? Of sales concluded by overseas office. Please find some metrics in all situations to identify whether any tax treatment is to be given, even in cases where it lies in office, branch office, project office, to see whether tax treatment is required, because there are inherent facts that are available on record that is no longer deniable. If you have these facts, how is it that we will say that the tax is not to be discharged? Liaison office, branch office, please don't treat these offices which have very low level of activity to say that, oh, this is a very simple case, I'll give it to third year article, very sharp, brilliant fellow, give it to him, he will do. I suppose we should evaluate the implications in that entity before we start assigning. Next is my favorite, startups. Somebody called one day and said, a few years ago, he called and said, sir, I want to start a startup. I said, all the best in a discounted phone. Every company startup. What are you going to do? I'm scared of startups. I'm even more scared of their founders. The confidence these young people have is remarkable. Remarkable confidence. And there are people investing money. So obviously I know less than that young man and that old man. So therefore I don't go near startups only. I'm scared. There are other people who happily talk to startups. Startups are very scary to me. Now we will examine GST for startup. Simple. Don't come, just send me the books. There's one person, during service tax time, there is one word aggregator that got invented as a omnibus term, as a term that has absolute clarity. It conveys the phenomena in the business so crisply that if you didn't understand, then you should not open your mouth. So we heard this term aggregator, then all these taxi people are all started. We are an aggregator, okay. So I met one finance head. She called and said, what are you doing in your company? What does your company do? We are an aggregator of aggregators. I said, okay, madam, more knowledgeable persons are there in our office. Please talk to them. I am happy doing contractors, real estate. This aggregator of aggregators is difficult. Identify in a startup the profile of activities. What is a business? What is a business? 217 definition is there. Nobody will understand what is in that definition. Everything is there. Profit, motive, frequency, regularity, nothing is recorded. Business. Government also doing business. So that is all not much assistance. Business is a business if it can demonstrate income generating capacity. 16.1 says credit will be allowed only when a business is there, not after incorporation. So we have to examine between incorporation and reaching income generating capacity. What is that interval of time? In startups, this interval of time is years and years. This 35D also is of no use. 35D also is of no use. Can you take all this expenditure and capitalize it? See, contrast these things, because in 1952 itself, this question of what is previous year, a new business was agitated by Bombay High Court in Western India vegetable products, our Wipro, stating that unless it has established income generating capacity, there is no business, which means revenue expenditure incurred during construction phase is not allowed to be carried forward because there is no previous year for income tax purposes. If there is no previous year, there can't be any revenue expenditure. 35D came in to save, saying 5% of capital for those 4 or 5 things will be allowed. But look at the expenditure startups are incurring. If you look, officers are focusing on 17.5, motor vehicle idya, construction 17.5 C&D, gift idya, restaurant, taxi, medical insurance. The expenses are all not covered by 17.5, but business is there. The nature of expenditure is rent, first rent, salary, then consultation. Consultation, HR consultation, finance consultation, PowerPoint, so many consultations are required, legal fees, RCM. Can you take credit? There's an expression called monetizing the business. You know what's that? New words we are hearing. Aggregate rights. Now monetizing. Now one more nice word I have for you after that. Monetizing is when will we actually see money out of it? Is this when you're studying for final, at home that question they asked, maybe now this generation I don't know, that generation they used to ask, okay, so much you're studying. When will you start contributing to the lodge that you're staying in? You're staying in this lodge. When will you start contributing to this lodge? Every day you're getting ready, every time you're studying. When will you monetize this idea that you developed based on somebody else's money? There is a very clear board meeting date when a decision would have been taken to charge off expenses. Those minutes we have not seen. I encourage you to please ask for board minutes. When will you start seeing this? When will you start seeing this? See, investors' money received, kept in fixed deposit, interest earned, that is other income in that financial year, that is not commencement of business. That is not commencement of business. So therefore, when will you monetize it? Until you monetize, why didn't you capitalize all the expenditure? If you ask any startup, what is all this expenditure? Yes, spent everything. Why is all waste expenditure? No, sir, I will earn income out of this. Then why you didn't convince auditor to capitalize it under AS 26? Why did you not capitalize it? Auditor may qualify if he is not satisfied. You yourself have conceded that it is period cost. You did not capitalize it. Is it not approbate and reprobate. I'm saying yes in GST that there is a business, and then I'm saying that no, it cannot be capitalized. There is no embargo in AS 26 from capitalizing it. You are treated as revenue expenditure. The board minutes which says that on this exact date we started capitalizing it. Therefore, all that credit in my view is suspect. The nature of expenditure may not be 17.5, but there is, see, the hurdles in 16 for ITC are not just in 17.5 or 17.2. The hurdles for ITC start with 16.1 itself. 16.1 has a hurdle, 17.2, 17.5, and so on and so forth. So therefore, visualize it from this point of view. When did you manage? Next, a more scary situation is, have you heard of this expression, pivot? Pivot. The business has now pivoted. We have pivoted the business model. We were only giving information about restaurant. Now we have pivoted and we have started supplying masala dosa. We have pivoted the business. When you pivot the business, does it imply that the activity until the point of pivoting was unfructified expenditure? Change of use. You did not use it for the purpose for which it was intended. Please bear in mind, 17.2 is tremendously potential. If you see para 4B and 4C, you will find that there is clarity as far as the treatment also. Please be extremely vigilant. If you look at the financials, you will not see any difference. Same salary, same expenditure, same heads of account, etc. will come in. But if you understand the business, you will be able to see whether there is any. Now, the question is, no, I don't want to reverse. If I tell my client, he will change auditor, he will not, he will not agree to this. Auditor will always remain the same. We have to be there. Where will we go? Huh? There are youngsters gnawing at your heels, but that's a different matter. No, client is very loyal to me. How many here believe your clients are loyal to you? 1%? 1.5%? Or he was unsure. Okay. Clients are not loyal to you. They have my phone number. They have Sai's phone number. They have everybody's phone number. You may not have my number. Ask your client, he will give you my number. So therefore, please be vigilant. We have to be loyal to the law. How can we sign a balance sheet that says that this is admissible input tax credit? How can we sign that balance sheet? What is our responsibility as a professional to say that that credit is admissible under 16.1? It may not be blocked. Still, we are also busy 2A, 3B, 3B, 4B, 4B, 5B. Same thing we are also. What is the extent of our analysis of the business to be able to establish whether credit is admissible or not? Please don't. Last few years, all the notices that we are seeing, my view is that this is they're scratching the surface of the notices. Someone told me even this, that when GST tribunal starts, the opening balance of the value of disputes is estimated to be 1 lakh crores. 1 lakh crores is GST disputes awaiting to be heard when the tribunal opens. Someone else said on 16.4 itself, the value of all disputes calculated, system calculated is 1,45,000 crores. Those who have filed returns after the due date. So if you have filed returns after, don't worry. Don't worry, you are in a long line, someone standing before you with even greater offenses. All right? So therefore, when you look at any financials to examine these transactions, you have to identify. So last point I will mention for you to please consider is, when you look at the list of clients that you have, I don't think we can say, okay, let's start with A and start doing all the 99C. Let's start with all the companies where the fees is high. Let's start with all the companies where the fees is low. Let's start with all the companies where the business is easy. We can finish it fast so that at least I get satisfied when I am nearing the due date that so many audits are complete. These last two are going to make life miserable. Then finish these two first and leave the others to make life miserable. Whatever is your basis, I would only urge you to please consider what are the the balance sheets where greatest amount of time and effort needs to be invested to even prepare 99C accurately. You have to take a position. You have to educate the client. How many? So let's do color coding. Simple, straightforward, everything perfect. 99C, 1, 3B, 4B, 5B, EWB. Whatever you want is matching. Right, whatever you like, it's all matching. Those kind of cases, let's color them green. Then we'll go to those where 2B, 3B, 4B, 5B, something is not matching. EWB is not matching. R1 is not matching with 3B, yellow color. We go to the next level where there's some more Skeletons in the closet, we'll color them orange. Then we'll go to the last category, dangerous. Notices are also there saying you have purchased from a supplier who has gone underground. His supplier was never above ground. All these kinds of questions are there. They have, and the show cause notice has a diagram in PowerPoint. Have you seen any show cause notice? The show cause notice has a diagram. Nowadays, see sophistication. Show cause notice will also have a diagram, red color. Now, in your mind, in that list of clients, please visualize how many are green color. Please raise your hand. Any green color? No green color. Any red color? I'm sure we are all not assisting anyone who is indulging in such mischief. Our members will not do such things. All our clients are basically yellow and orange and different shades of orange also. Deep orange, light orange. You understand now how we should prioritize the sectors that we will need to do. This I will add another flavor. What are the sectors you already have deep understanding? In Bangalore, you should have deep understanding about what? IT. What is IT? Nobody knows what is it. Department does not know, ASTP does not know, customs does not know, nobody knows. What is it? IT. If you say IT, no questions after that. Only risk is IT is intermediary or IT, that dispute is there. Other than those sectors that you are fully comfortable with, what are those sectors where you have, with great enthusiasm, accepted that assignment because fees was good, fees was less, future potential is there, client is your friend, client is compelling you, client is related to you through your wife's side, some such reason will be, some motivation. You have accepted and you have no knowledge of that sector. I would sense that that is where we should approach first because the implications are so profound. Implications are so profound because every possible situation, treatment that needs to be done exists in those cases. Reason why I'm saying that we have to look at what's happened in allied laws, what's happened in the past is because it's been 6 years. This is not the first year for us to take a fresh view of things. Whatever we have said in the past will also have a bearing as far as how we are going to respond here. Notes and disclosures to 9C can contribute in a significant way later on if there were to be any issue that is to be raised. The reason why we have to examine these things is because somehow we tend to think that it's just a return that we are trying to file, consolidating information, part 2, part 5, we will show credits in part 3, 2A, 3B, this. All of those things are important, not to dilute for a moment the importance of all of those things, but there's something that needs urgent attention for us to see what else do we know about this business that can change the way we present the financials as far as the returns as far as 9 and 9C is concerned. I'll give an example. I buy fertilizer for 100 rupees. I sell fertilizer for 30 rupees. 70 rupees is subsidy I get from the government. I have accumulated ITC because of value inversion. There is a rate inversion to the extent of GST paid on gunny bag. Gunny bag has 18% tax. I will sell fertilizer with gunny bag at 5%. So under 89.5, I will be eligible for inverted tax refund. I will go and say, this is the formula, and I will report the entire accumulated credit and I have got refund. I have got refund under 89.5, all the money, I have very small amount of accumulation as a result of this, and I'm carrying that credit forward, possibly trying to see what else I can do with this, etc. There was, in the last few years, there's been a major drive of all consultants to offer one value-added service called credit optimization service. Credit optimization, how to juice out maximum from everything. I'll come to that. The reason why mischief is taking place is we only can identify these things. All right, you identify this, he's claimed refund. How will anyone locate this? In one particular investigation, this came to light where between the date of sale at 30 rupees and the date of collecting subsidy from the government, there is an interval of time. Financials are reporting sales at 30 rupees and subsidy comes in a few months later. Subsidy is not reported as revenue in the month in which the sale is made. Why? Because subsidy will be paid only once OTP verification is done from the beneficiary. The agriculturist who collects, because fertilizer can be used for non-agricultural purposes also. So only after OTP verification, subsidy is done. So now the question that arises is the company beneficiary of the subsidy or the farmer beneficiary of subsidy? The interval of time is a telltale sign that the farmer is the beneficiary. You should have paid output tax on 100, collected 30 rupees and waited for the government to, it's the receivables that is being paid by somebody else. It's not that it is a subsidy. So just because, as soon as we see the expression subsidy, we sort of stop inquiring any further. Only accountants can understand that sale and subsidy for a given transaction are taking place in 2 different times, possibly spilling into another financial year itself. What is the position we are going to take about this? Refund has been received and this issue has been observed. At the very least, we are responsible to notify the client about this situation for them to evaluate further whether these things need to be examined and a different position taken or not. Friends, please bear in mind, circulars issued by the government are wrong on so many levels. Circulars issued by the government are wrong on so many levels because it is to resolve an impasse, a dispute about how the interpretation should be done. Circulars have been issued. Whenever a client you see relying on any circulars, you need to be cautious. What happened to the position prior? What is the position going forward? How the issue has been resolved? If the issue has been resolved in this manner, for the intervening period, is there a liability that needs to be treated or not? 9(9)(c) I think is a great occasion for us to, of course, bring this understanding of the business to bear in any given assignment, but also bring value to the client to identify what corrective measures they need to take. See, every assignment can be very routine, mindless. Statutory audit also, I've seen many companies say, oh, this is statutory audit, secretarial work, what is there? Nothing, you arrange board meeting, sign everything, paper meet. People respect the work we do to the same extent that we give importance and bring value through those assignments. 9(9)(c) is a wonderful occasion for us to, of course, refine our own view of things, sharpen our understanding of the sector, bring and examine how it needs to be reported and educate the client. It's not like we're trying to report someone to someone and send some alerts to anybody, but definitely 9(9)(c) should not be considered as something that's a very routine aspect. And if these many members are concerned about finding what new things could be there for us to understand, I would only sense that these many members are not the ones who are signing. There are doing 9(9)(c). I'm sure there are many members who have taken up assignments, but perhaps have not fully grasped the implications of what we are reporting in 9(9)(c). When it comes to litigation, what has been reported in 9(9)(c) is a big hurdle that any litigator will have to overcome. What has been, you have said this in 9(9)(c). You have stated this in 9(9)(c). Then what becomes of it becomes a very big implication. So please be very careful how we identify these transactions and report them, because there are so many positions we have taken in allied laws that we are not reporting them accurately in GST. Contradictions could arise, how we are treating. For example, that the question that Vishnu Sir mentioned about gifts, is the answer very clear as far as how a position needs to be taken. Friends, please bear in mind, when we carry out self-assessment, we have to do it truthfully. Assessee has done it truthfully. Whether it is accurate or not, like someone rightly said, will only be known once someone tests it. Someone challenges it. But mind you, someone is going to challenge it. Someone is, maybe the way they will view it, the basis on which they will challenge it may not be accurate, but still it is not free from challenge. So it is absolutely necessary for us to be very sure how we are taking tax positions and reporting them at the time of 9(9)(c). Please make sure that disclosures already made in tax audit or the financials that have been signed already, whether they need some refinement to state how exactly this should be reported, rather than assume that those things cannot be referred and elaborated. Otherwise, adverse inferences will be drawn based on words, because the idea is to implicate a taxpayer with an innovative new interpretation. When you look at these cases, please examine certain sectors, few more minutes please, certain sectors are not even prone, certain sectors are less likely to have divergent tax views. 5% without ITC people. 5% without ITC, peaceful, no challenge. Certain sectors are potentially capable of multiple views being canvassed. If in that list of clients we have identified there are certain sectors where multiple views are possible, it is inevitable that we examine what those possibilities are and be prepared with what disclosures, what statements, what stand, because taxpayer is the first person who will respond when any departmental proceeding starts. Consultants will come in only later if he feels that he is not able to answer them effectively and settle the issue. He will then only reach out to the consultant to see how what is unsettled can be now resolved through process of law. So when you examine it from this point of view, is it not our responsibility to appraise to the client that he is in dangerous territory? His commodities, his transactions, tax positions is taken, the disclosures that have been made, is it in comfortable territory or is it in dangerous territory, is something that needs to be examined. Because after all, what annoys anyone more than anything else is after multiple people have looked at financials and GST returns, if there are still any surprises. And I hope this year's exercise is going to be one without many surprises, because we will have possibly identified all of them and shared them with our clients and continue doing the good work that we're doing. Thank you all very much. I thank the branch for inviting me and all of you for your participation. Questions? Amela. Questions, please. No questions. Sorry? No, we'll have questions. Any questions? Or I will identify people who should ask questions. Yes, Rahul, first question from you, please. Anything coming to, you don't have to force yourself to ask, but I'm sure there are some things that is coming to your mind that I may not have explained myself well, if there's something that is bothering you in your assignments. Any question? Absolutely clear with everything that you, I'm sure all the credit belongs to speakers throughout the day except me.
Many companies have employees in one state and main registered office in another state, and the billing happens from the registered office to the subsidiaries outside India, I mean parent companies outside India. What are the implications on the ITC, whether there is eligible ITC credit, which is when, I mean, can I transfer the ITC from the branch where the employees are there to the head office, or should I take a registration from that state and avail the credit then and then do inter-branch billing?
See, if you have people and premises in a particular state, then it appears there is sufficient degree of permanence with human and technical resources for that location to be constituted a place of business. If it's a place of business, then you're liable to register. You ought to have registered at that state where the people are located, and they are providing services to the head office. They are providing services to the head office. If you rely on circular to say that you will not charge anything, then you can't transfer the credit. It is always in your interest not to follow the circular, to claim credit and transfer it, and then head office will be able to claim credit of those things. But you cannot transfer credit. Credit cannot be transferred. Examine if that constitutes a fixed establishment. It is a fixed establishment, and it will be a place of business. 271, you have to pay tax. Get registered and pay tax. Yes, ma'am.
Hello, sir.
1 minute, ma'am. I will ask this question. Then next you can ask.
Yes.
Dekho. Understood.
notices that this is not a way to avail input. Firstly, you need to avail, then you reverse it.
Correct.
But actually, I did not avail that input.
Very good.
Because this is not actually, I don't want to make them part of my financials.
Correct, correct.
Financials also in GST also.
Got it.
So what is the correct treatment? Don't make part of that, don't avail that input, or first avail, then reverse.
In the new 3B, you are supposed to avail all the credit that appears in 2B and reverse washing machine repair charges for which someone gave your GST number to your father. All those things you have to repair, you have to remove and retain only what belongs to you. But in the past, there was no such compulsion in law for you to avail everything and reverse. So therefore, if you have availed net of all those non-business transactions, then there's no.
That we are reversing it, then where should we reverse? In 17 subsection 5, that other reversal, or that bottom of that not eligible, one more reversal is there? No?
Correct. Right. In reversals 4B1, 4B2, you have two provisions. You have to reverse where a permanent reversal is being made. That's 4B1. You will reverse it.
Okay.
Yes, ma'am. You had a question. Easy question.
So now we have we can claim refund on inverted duty structure inputs, refund on inverted
If
duty
the rate of tax is higher on inward supplies and of goods, and the rate of tax on outward supplies is lesser. Yes.
I mean to say concessional rate actually. Now we have a notification. If it was a concessional rate, then we could claim refund on that also. Research institutes, if we had supplied at a lesser rate, that concessional rate
Yes,
notification,
yes, yes,
on inputs. But the situation is like we have imported the service actually. So it was paid under RCM, import of service, and we have supplied it under
Nation building, nation building.
So
No
that is-
refund.
yeah.
Nation building. No refund. If you write it off, you will get 30% income tax deduction. Ashte.
Yes, so that is what
ಏನು ಮಾಡಕ್ಕಾಗಲ್ಲ.
we had applied and it got rejected.
ಒಳ್ಳೆದಾಯ್ತು. If you had if they had sanctioned, I would be worried. Nation building, nation. Yes, sir.
So whether GST is subject foreign holding entity supplies ESOP to the Indian subsidiary companies employees.
Correct. So this is the part that we were discussing. In the Indian subsidiaries financials, there is a charge to P&L. There is a remittance also made towards the value differential based on the option pricing model. So therefore, there will be an exposure to GST on reverse charge basis.
Oh, it will be considered important.
Correct, correct. If you pay it, you will get credit. If they ask you and you pay it, no credit also. Yes, please. Yes, sir. Akadi kudi.
To continue on that ESOP, last year there was an amendment under accounting standard. There was a guidelines note which said it's a notional transaction.
Right.
So there might not be a remittance also.
Right.
In that case, will the GST be still applicable? It's a notional. We debit to P&L, credit to reserve. No
See,
remittance happens to the overseas entity.
So we have to examine whether the underlying transaction is artificial or real. The treatment may be based on notional valuation. If the underlying transaction is real, then can we deny the GST treatment based on the real underlying facts? I mean, it may not be possible to deny the transaction. Even in financials, if you are treating it as a transfer to the reserve, I may not making a remittance.
Because there is a grading model which is used for valuation.
Right.
So it takes into account the 5 years cost and accounted in a grading model. So the cost might not be even representative of the actual value, because these are also starters lying in US.
True. True.
There might not be even exercise of any of those ESOP.
Even without an exercise, you will have a charge to P&L account here.
Yes.
This is, if this is to normalize the transaction over
Yes.
multiple years, then you can restrict your tax payment to exercise transaction.
Yes.
But, and not treat it. See, but when we enter a debate about valuation, we have admitted supply. Correct. We are debating valuation. That means supply we have admitted. If you want to dispute, you should dispute the supply itself and not enter the dispute about valuation. But I feel there's a very good case.
That would tantamount to non-compliance with the accounting standard, which will invite a qualification from the auditor if you
But
have to dispute the valuation itself.
which means all laws are now harmonized.
Yes.
Therefore, there is no deniability itself for these transactions. You can at best, perhaps in your example, exclude transactions where you have considered in the valuation which are not yet exercised, so that there are no unnatural spikes in a given financial year compared to the duration of the plan. Exclude those and discharge tax. But then you know what it becomes? It becomes a timing difference only. When will you discharge? That you will discharge GST is now not in dispute. When will you discharge GST is the only dispute. Over a sufficiently long period of time, you will have discharge tax on the entire value.
Thank you.
Example.
The guidance note says we need to charge that in P&L, but corresponding effect is not the liability, it is deemed contribution of equity. Deemed contribution, so there's no actual inflow also for that, no chargeback. In that scenario also, here you have agreed on the valuation. So are you trying to say that reverse charge mechanism will trigger here also? It has been
The answer is still the same. If the underlying transaction is real, then there's no question of denying that underlying transaction. The treatment in the books only is notional in your case.
right.
But you're admitting by your own disclosure, you're admitting that there is a real transaction taking place, and that will attract GST treatment also. I will actually request Sai and Anupurna to please come on stage. Please ask them also questions. Bunny. Please come. So come. All your, please reserve questions for them also. Please come. Don't spare them. All the difficult parts they covered. So please come. Sai, come. Bunny. Only difficult questions. No, they have contributed in a very significant way in our branch, other branches, in sharing their learning, and they've, in some of the, please sit. In some of the discussions I've had the privilege to participate, I've seen the effort that they would have put in to be able to bring that discussion to a meaningful level. Please sit down, ask them also questions. If you have questions, Rahul, please attack them.
So my question is, what is SB009 error in that list of error codes that you listed, and how do we resolve it?
Look at in hindsight, what a brilliant move. I'm very proud of myself. Please.
That is actually a cancelled shipping bill. See, many times what happens for a single transaction, first they would have filed a shipping bill, but that would have not gone into the actual export and the LEO part. It would have cancelled therein. It's a single invoice, but multiple shipping bills. But after cancelling, they would have gone into another one. So what happens while filing GSTR9 is the validation happens at the IceGate portal for the final SB errors. But sometimes, all variety of errors are made. That cancelled shipping bill number would have gone in the GSTR1. Actual shipping bill would be lying in the IceGate portal. But now it's really appreciable that a window is open ever since 17-18, even while filing November or December return, you can amend that so that data can get synced in and you can get back refunds of those things.
How do we amend the SB009 error?
See, that SB number what has gone in GSTR1 is erroneous, which is wrong. It should be replaced. You can amend table 6 of GSTR1 in the current month return.
Okay, we can amend it in the GSTR1.
And put the right SB number. Yeah.
For the invoice number, basically.
SB number, shipping bill number.
Against that, shipping bill number has to be replaced with the correct shipping bill
extract that proper invoice.
Yeah.
All details get populated there.
Okay, good. Thank you.
Jora Keli. Good evening.
Assessee would have not paid tax on RCM basis. So we will identify those cases and we'll ask them to pay. So the next question they'll ask, or even we all ask, is whether if I pay RCM now, whether I'm eligible for ITC. Because it is, when Sai Prasad sir was telling, it will get time barred by 16.4. This is one thing for RCM. My question is another on even the normal invoices. During 17, 18, 18, 19 and all, now we are getting notices where this 16.4 issue is taken up for a lot of cases. But the wordings used in that 16.4 is only taking of credit. It doesn't talk about availment of credit. So in 3B, we should avail the credit. So in other places, I have seen availing the credit and taking the credit. So I think taking means only it's taking in books of accounts, or we should read it saying that it should be in 3B also. So that is my doubt actually.
See, what you want to do? You want it. Murder ಮಾಡಬೇಡಿ. Notice ಬರುತ್ತೆ. See, at the time of taking a position, you are aware that there are two possibilities. You are trying to buy insurance policy from me. Correct, no? There are two views. What you are saying is not impossible, because great impossible things Supreme Court has already done. We never thought, Northern Operating System's judgment will ever come, but it has come. So therefore, take a position and follow it and be prepared for everything that will follow. I don't want to say that this is the only correct view about this, for the reason that that cannot be, I'm not the final word on this issue. Correct, no? So therefore, Sai has shared with you one view that is not suitable, not to your liking. You want to take a different view, you are forcing me to join your side. There are 3 views for every issue, not 2. There are 3. I can understand from your point of view that you want to pay belated RCM now and take credit. Your question therefore is whether it is a defendable case. Fees kotre, all cases are defendable by you. So don't worry. Please proceed to take credit. Please proceed. There is a reasonable chance of a favorable outcome. Good answer. Whether you have to reverse input tax credit when your supplier has given you discount for making payment early. What you want to do? What you want to do? No, what you want to do? What you want, you can only tell. You don't want to. There is a possibility to defend that position. Please sit, I'll tell you why. See, cash discount, can you say, was a contingency at the time of making the sale connected with your transaction? That is one aspect. Next, if you actually see, in England, see, that's how you give start with England. In England, there is a principle in Pennell's case where it says the original contract sum agreed at the time of contracting cannot be detracted from. So there you have to pay the full price that you originally agreed. We call it commercially cash discount, but this is actually a renegotiation after performance of contract by one party. How unfair it is. But in section 63 of contract law, the promisee has the entitlement to sit and renegotiate because of time value of money. 1 lakh rupees, 1 year later, 95,000 rupees, today is better, no? Given today's time, the times that we live in, 95,000 is better today. So 63 permits it. So therefore, you can take a position that it is not a failure to discharge the tax, the full consideration, so that you don't come within the mischief of a second proviso to 16.2. But what you want to do is important. You do that, and then there are defenses that need to be taken. It's a very good case to defend if the issue were to be raised under Rule 37. Confused? Ade. Next.
Sir, when 16.4 issue was discussed, there was one thing brought out, that substantive law and the procedural law.
Yaru? Sai Prasada? Sai Prasada? Ah, okay.
Well, how do we identify that this phrase or this law is a substantive or this is a procedural in nature? Because in the whole GST law, there is maybe much more substantive phrases or procedural.
So this question is very harmless question, nothing to do with 16.4. Question is about interpretation of statutes, how to identify substantive law and procedural law. Substantive law is simply the provision that lays out the mandate as to what the subject of that statute needs to do. Procedural law only deals with how it has to be done. What should be done would be substantive law, how it should be done would be procedural law. So if you identify this, further reading Justice G.P. Singh's book on interpretation of construction of statutes, statutory construction, please, it's a very nice book. You'll get a lot of instances from Rent Control Act, Transfer Property Act, Sale of Goods Act, lot of examples you will get where substantive and procedural have been discussed. Excellent answer to an even excellent question. Next question is for Sai Prasad.
Good evening, sir.
Good evening, sir.
Sir, in case of JDA transactions which are entered prior to GST era, and sharing agreement and other transactions are happened in the post GST era, and that too project is in new rates.
In new rates?
New rates, not in the old rates. So what would be the implications on land rights transferred by the landowners to the builder and the construction services given by the land builder to the landowner?
Transfer of development rights is not a continuous supply. It's a supply at a single point in time. That was carried out prior to GST, so therefore supply of development rights will not be liable to GST.
Correct.
Construction services is a continuous supply of services, so pro rata extent of construction completed by 36/2017 cannot be brought to tax in GST, because you have 142(11) very clearly says if the levy was under the earlier law, merely because some time of supply event occurs in GST law does not mean that GST will be leviable. So the proportion of construction carried out post 1717 will be liable to GST once the developer hands over the units to the landowner.
But whether department can ask for the service tax for the land rights transfer?
No, service tax was not there because there the language was immovable property. Here it is sale of land. So therefore service tax, I don't think they are demanding. Do you have any instance where service tax is being demanded on development rights?
No.
It's not there. They won't. Anyway, now limitation is also over.
Yes. Thank you, sir. Thanks.
Thank you, sir. Yes, ma'am.
GSTR1 late filing fee for 2018-19. So should we, like, what should we reply? Because it is not for GSTR1, it is not yet auto-populated on the portal itself, but they are sending notices. So as you told, ki it is not in the act for late fee actually. Interest, it is chargeable, it is okay, but they are sending notices. So how to reply for that?
How to reply to a notice?
Yeah, I got notice.
You got a
for
notice under, let us say,
GSTR1.
section 73,
Yeah, late
asking you to pay late fee.
Yeah, late filing fee.
Okay.
For GSTR1, GSTR3B is auto-populated, but they filed, delay filed GSTR1 as well. I think this is for 1 year.
It's okay, it's okay. So for GSTR1 late filing, they are sending you a notice under section 73, asking you to pay late fee. Okay. How to reply?
Yeah, actually, this was auto-populated just as ma'am said, ki, on portal only it will reflect. So how to reply this? Matlab, like, should we will have to pay. There is no option to counter it, right?
No, the question is very, very clever question this is. You want to pay or you don't want to pay?
Sir, who
There is
wants
no
to pay? Who wants to pay. No,
Client will
I
decide.
don't want to pay.
See, the short point is, under section 73, they cannot demand late fee. That's all.
Okay.
Under section 73, they cannot demand late fee. If someone were to say, anyway you have to pay, under any section you can pay if they start, then it will cause a breakdown of the entire due process of law. For everything there has to be a process. If 73 is not equipped, then 73 needs to be amended. So therefore, your response could be that section 73 is not the section to demand late fee.
Okay.
What is the other section? That is not your responsibility to provide information. Section 73 is not the relevant section to demand late fee.
Okay.
But this dispute may not end here. They may find one more section, but the encouragement that department has received is, as soon as you get a notice, there is a long line of people with a challan in their hand to inform that they have already discharged. That is what is motivating tax administration to canvass acrimonious interpretation. It is for us to educate taxpayers about the rights, remedies and safeguards available in the law and allow them to choose what instructions they will give us, saying accept and discharge or dispute and litigate. If they want to discharge, nation building. If they don't want to discharge, then that is when you will have to put their arguments, what was shared earlier by the speakers today.
Okay.
Just one point.
Please. Sir, you also, please share your thoughts.
See, off late what is happening is, the moment you file GSTR1 belatedly, at the time of filing GSTR3B, even one late fee is populating and you are left with no choice but to pay that and discharge. But old period where manual notices are issued, that was the point I made during my presentation. Not only for 9, that equally applies for any other form, applicable form as well.
Yes, please. Mike, could you? Right. Correct.
So is there any mechanism for an SSE if he doesn't have any sales after that to claim that amount? Because currently there is no mechanism.
Refund? Possible.
Refund under
54.
The amount doesn't get populated in ECL.
Doesn't matter. Credit note has been issued. Refund is the only remedy under 54 to make a claim. The system permits, the system in GST, not portal, the process in GST is for you to suo moto adjust with any liability in the future, effectively giving you a refund. So therefore, please make a claim. If you don't anticipate any sales in the future sufficient to recoup this excess tax discharged, please file a refund. I'm thinking department may say limitation runs from the date you paid the tax. Within 2 years, you have to make a claim for refund. You may need to get confirmation from your customer that he has reversed the credit to satisfy unjust enrichment. Please make a claim for refund.
Thank you.
Also, in support of your refund claim, you can attach the system generated 3B. If you download the system generated 3B, it will give a breakup which the internal tables will have that excess of invoices and excess of credit notes reduced by the invoices. So that can be a document to substantiate your claim.
Right.
How will it populate in GSTR9? Because I need to file GSTR9 now. Transaction is prior to March.
When was the credit note issued? When was the credit note issued? In the financial year?
22-23 says the credit note was issued in the month of February. The
invoice was earlier to that in the same
yes,
financial
so
year. You will show in 4H or 5I your credit notes that are issued, adjust the taxes payable in table 9, tax paid and payable there will be a mismatch. In table 15 your refund application also, if you want, if you file within the time limit, you can reflect that, or you carry it forward, next year you will reflect it. But please don't let this money go. Please don't let this money. One interesting issue I have in this context, where to the extent of output tax that should have been claimed as a refund, assessee is added to his ITC. Now he has got a notice saying 2A is not matching with 3B. So these instances are, don't improvise. Don't improvise. Reduce expenditure from other income, credit expenditure to staff welfare account. All these things don't improvise because portal is not able to understand. Machine is still learning. Or, of course, it's always earlier auditor, madam. Those people don't come for seminar now. Go on, go on. Mm. If you see overall, there is nothing payable. But if you don't see overall, there is lots payable. That is the facts, right? You are not certifying. You are not certifying. 999C, you are not certifying. Inform the client. Client will file 99C the way he sees it serves his interests best. See, there is no doubt that he has done something that is outside the law. Correct, no? Now he is trying to add some logic and compassion and all these things to convince somebody. Like very nicely you presented the facts to confuse me. That is, as far as the client is concerned, you will tell him very clearly this is the factual position. It's for them to make a decision what they would like to do. What they would like to do. So I will better answer that. He is one who calls a spade a spade. He is one who calls a spade a spade. Sir, your comments about it? If you have a situation like this where...
Please press GST.
Sir, nimge.
Some taxes, like we keep balances, so we are not liable, supposed to pay interest liabilities. But the such mechanism is not in GST. Like
No, it's not there. Only for credits, there's 188B.
yeah, okay, thank you, sir.
Any other questions? Yes, sir. Over to you.
As Jatin sir always say that no clients will be loyal to you, so be it. You also should not be loyal to your clients. And even you need not be loyal to GST officers also. But being a finance professional trusted for 7.5 decades in this country, be loyal to the law of the land. With that note, with a fantastic sense of humor, free flow of thoughts and dissemination of knowledge for that 135 minutes by beloved speaker CA Jatin sir. Let us give a big round of applause for that wonderful session. Thank you so much, sir. On behalf of members present here and all the managing committee members of Bangalore branch of SARCFICI, we would like to hand over a memento to the speaker as a token of gratitude and respect. I request Pramod R. Hegde, our Vice Chairman, to do the honors. I also once again thank CA Sai Prasad sir and CA Annapurna madam for the Q&A session. Thank you so much. I, CA Manjunath Emalur, Secretary for the branch, sign off for the day. Thank you so much. Okay. Before closing, we have another announcement. We have 8th and 9th of December student conference being conducted by SICASA Bangalore. I request all of you to register your students for the conference. Thank you.